What's good, everybody? Y'all know who it is. It's your boy, the Grandmaster Troll. Not only giving you the best trolling content, but we're gonna give you some stock market advice, the best on YouTube. Let's see, I'm trying to get everything set up as my computer went out for some reason. But shout out to the Reject Army. See if I can make this a bit more brighter. There we go. Shout out to the Reject Army, Nif-Nons, dishwashers, bedwetters, the factors of the Black Order, Gorilla Simps out there. But most importantly, witness the power and the might that is the most dangerous troll on YouTube. So I've been looking to do this stream for a while now. I talked about stocks rarely on my channel, but I wanted to do a deep dive today. So we're going to talk about how does the stock market work and how to start investing successfully. We got a couple of people in the chat. Real Gamer, he says, what about comedies and ETFs? Yeah, they say try to not put you to sleep. Oh, believe me, I will not put you Negroes to sleep. I will not put you Negroes to sleep. But we're gonna talk about stock marketing, investing in the stock market, why you should do it, how to do it, give you guys some creative ideas, but more importantly, change the way people think about money. So the reason why you should invest in the stock market, well, it's simple. People are making a lot of money. Well, people are also losing a lot of money, but for the most part, people are making a lot of money doing something very easily by getting their phone or getting in front of a computer or calling up their brokerage and buying stocks. So with that said, we got to talk about what a stock is. So let me see if I can find my slides real quick. So what is a stock exactly? Well, a stock is a share of ownership in a company. So you go on your brokerage, the stock will be $8, $20, $1,000, $2,000. You want to own that company to partake in some of the profits. You could buy a stock. An example up here is Microsoft. You see the share price at $216. They have 7.56 billion shares available. You times the price of the stock by the shares available. That will give you a rough estimate as to what the company is worth. So that is a stock. Now, why do companies issue stock? Oh, that's the best part. Why do companies issue stock? Well, the reason why companies issue stock is the same reason why I got the $ right here, Grandmaster Troll. The same reason I have the super chat. It's because you're trying to raise capital. Everybody's looking to raise capital. And one of the reasons why companies issue stock is they want to raise capital. Now, what do they use that capital for? If you want to fund a new product line, so I want to start GMT Racing. I want to do Grandmaster Troll Money. I also have a smooth officiating YouTube channel. But all of that stuff requires money. So I get on YouTube. I do my great troll impersonations. I dox and troll people on YouTube, and people show their support. Google gave me AdSense, and now I'm using that money to fund new products. Or if I want to do research and development, if I want to invest and grow my business, or if you were broke Negro and you're in debt, well, you're going to want to raise some money to pay off that debt. And that's why companies issue stock. So a company will either IPO, that's when they become a public funded trading, and anybody could buy their stock. So that's why they do that. Next, we're going to talk about, I'm going to go through real quick right here before I get to the good stuff. I gotta get through all the boring stuff first. But we got to talk about the type of stocks and how they're characterized. You got large cap, mid cap, small cap. That's basically the market cap, or what the company is estimated to be worth. So if you're a large cap, you're over a 10 billion market cap. So that would be like your Amazons, your Googles. Then mid caps are your mid to intermediate. So you would have to actually go onto a Robinhood and look at the see what the market cap is for that stock, and that will determine if it's mid or small. Small caps are if you're looking to hit a home run. Investing, you want to invest in a small cap, and you want that small cap company to eventually become a large cap company where their estimated net worth of that company or value of that company 10x's or 5x's, because usually that share price is going to 5x. So when I showed you what a stock was here, there was a time where Microsoft stock was a $30 stock and their shares outstanding was much smaller and their market capitalization was much smarter. But as they grew in size, got more investors, they went from a small cap to a mid cap to a large cap. So that's that right there. What we got here? Oh, the different type of stocks right here. As my man Tariq comes in, Water Sniper said 6 a.m. I tell you, man, I woke up at 7:54, and then I had to put this presentation together, and it took a little time. I didn't even eat breakfast. I just took a shower, got washed up, and jumped in front of the computer. So I'm really giving you some good content. I want to do it at 6 a.m. and the reason I want to do it at 6 a.m. because we're gonna follow the stock market as it happens. We're not going to do that today because this is a brief introduction, but we got some stuff to look forward to. But 6:30 I will be going live, so I probably won't be doing as many live shows, or I'm going to cut them off much sooner because I know y'all got these long final thoughts y'all like to give, and y'all keep me up all night arguing with each other. But the different type of stocks, we have growth stocks. These are big potential for growth. These are sometimes small caps, like Amazon was once a small cap company and it grew and grew. It doesn't pay a dividend. Like growth stocks, typically there's no dividends involved. So Amazon, your Facebook, Microsoft does pay a small dividend. Then you got your income stocks, which are my favorite, which I'm really a big expert in. Dividend stocks. Those pay you a dividend either monthly, quarterly, annually, semi-annually. It all depends on how that company is set up to pay their dividends. Then you got value stocks. So a value stock will be a stock, let's say, let me think of a good value stock that you guys will be familiar with. Okay, you guys heard of the store Macy's. Everybody's grandmother has bought them an ugly sweater or dress shirt at Macy's. Well, Macy's is a value stock. Sometimes the stock will be high, then for whatever reason, like during the pandemic, everything got closed down. So Macy's became a great value stock because the stock price got beaten down because of the uncertainty around COVID. So Macy's is a value stock. Then you got your types. Another type of stocks are your equities, is what they call. You got individual stocks. You got mutual funds, index funds, exchange traded funds, ETFs, and my favorite, you got REITs. You got MREITs. So we're gonna talk a little bit about that going forward. I'm just going through real smooth right here. Then you got then stocks are broken down into different sectors. These are typically your big 11, but even within these sectors, you got subsectors as well. So you got your energy, which is your oil and gas. You got your materials, such as chemical, industrial, consumer discretionaries, consumer staples. You know, if you go to a Walmart and you start buying food, you start buying your beverages, those are your consumer staples. Consumer discretionaries, apparel, so clothing stores, Nordstrom, Macy's, JCPenney's before they went bankrupt. Those would be your consumer discretionaries. Healthcare, financials, banks, information technology, the tech sector, Google, Apple, telecommunications, AT&T, Verizon. My favorite telecommunication that I invested in was CenturyLink before they changed their name. And you got your utilities, PG&E, and my favorite at the bottom, real estate REITs, which is apartments, malls, office space, or even mortgage REITs. So that's that right there. We're going to say that. So those are the different type of stocks right there. Now, since all the boring stuff is out the way, we are going to have some fun. I'm going to try to interact. I'm going to interact with the chat right now. I see my man Wake the Hell Up in the building. We got 30 people watching. We got 20 likes. We need to get the likes up. Psycho Candy is in the building. But now, you guys, I know some of you guys have been thinking about buying stocks. You're trying to get financially literate to buy stocks. There's a lot of information out there. You don't know where to go. You don't know how to go about doing things. Well, that's why your boy GMT is going to help you out. For those of you guys that don't know, if you slide down to my description section, let me see as I slide. Did I update it? I forget to update it. I sure did forget to update my description section. So, what you're going to want to do, once I update my description section, I got a Facebook group that I made almost a year ago. I got people that officiate, family and friends in there, and we tried to trade different stock ideas. But I got that group. You're going to want to join that. I have a channel called Grandmaster Troll Money. You're going to want to subscribe to that one. It's not in there, but more importantly, did it even update? No. Okay, so I put it on the upload. So what I did was I put a link for Robinhood and Acorn. So if you don't have a brokerage, you could sign up through that brokerage. You could actually get a free stock. It would more than likely be a penny stock or some stock less than $5. Then once you get your brokerage set up, go to your family and friends who aren't invested in the stock market. Have them use your link from your brokerage so that way everybody could get free stocks. And the more times you do it, the better value of that stock will be. But now you guys are going to talk about GMT. Where do I go to buy stocks? How do I actually buy a stock? What are the steps of buying a stock? Well, the first thing you got to do is you got to open up a brokerage. There's a number of brokerage. Each have their own pros and cons. I use Robinhood. I use Fidelity, I use Acorns, I use Webull, I use M1 Finance. I don't really use M1 Finance, but I have a brokerage through M1 Finance. So I wanted to start different brokerages at $0. We're going to start at $0. So those people who aren't involved, you'll be able to come to this channel and grow with somebody investing. You'll be able to pitch different ideas with a community of people who are interested in investing, and we can see if we can help you make some money. So with that said, I use Robinhood, and I'm gonna throw my Robinhood stuff up right here. I recently sold all my stocks because I had to move into this place right here, this beautiful place. Me and a group of friends, we put some money together to buy this nice place that we're living at right now. So that's one thing you could use your stock money for. Some people use their stock money to pay their bills. So if you're a dividend investor, by you having a certain number of shares in stocks, those companies pay you monthly, quarterly. People will take that money and pay their mortgage and pay their bills and just basically live off the dividends that their stocks are paying them. Some people use stocks to possibly hand down to their family. Some people use stocks for retirement. Some people even use stocks to fund other investments in businesses. So people will put their money in a stock. That stock will go up. They'll take the profits and use that money to invest in a business, invest in other stocks. It just all depends on that person. So that's one reason why people invest in stocks. But I use Robinhood. And we're going to throw up the Robinhood account right here. Let's see, I'm all black right now. We're going to throw up the Robinhood account right here. So, we're going to talk stock strategy and how to put money in a stock. So, it's very important that when you start your brokerage, whatever you join, when you Fund money. You're gonna want to fund money on a consistent, continuous basis. The reason I say that, let's say you invest $1,000 February 22nd, and then you wait a month and it's March 22nd, and now the money that you have invested is $900. You have lost 10% because whatever you invested in lost value 10%. So if you want to see gains throughout the year, you have to consistently invest the money. So you may do 300 consistently every month. You may do 500 consistently every month. You might do $100 consistently every week. But if you want to see growth, you got to invest consistently, because as the stock prices move, as you can see right now, I only have 7 stocks in this brokerage account, which I'm going to use for this YouTube channel right here. You can see as I move it, the stock price goes up and down. So if you buy right here, which is the high point at $103, so let's say you put $1,000 to make it even, $1,003, and then the next week it goes down and you lose a percentage. Well, most people get scared. They get little frantic. They want to start selling their stocks because they're losing their money. But you have to consistently over a long period of time, because as I click on one of the stocks that I own, one of my favorite REIT stocks that I've owned in the past and that I recently bought, we're going to go to the 1 year window right here. We could see back before COVID, this was a $20 stock, and then when COVID hit, it became at the bottom a $7 stock. Now, why is this important? If you bought high, then saw it go to 7, most people would get scared and don't buy. But when this stock hit the bottom, this was the perfect time to buy this stock. Because if you buy it at $7, it brings your cost basis down. So if we go down right here, see, we go down, what do we have here? What do we have here? Does it show the information I have here? Sure does not have the information that I'm looking for, but Robinhood will keep track of your cost basis. So I'm going to open up my cell phone and see if I can find it, because I know it does it on my cell phone. But you want to buy, so if you bought 10 shares at $20, then say you bought another 10 shares at $10, your cost base will be 15. So your midpoint or your average would be 15. So when this stock goes up, once it passes $15, you now have a profit. But if you keep buying at the high points, because that's when you think the stock is going to be good, it's going to go down and you're not going to have a lower cost because you keep buying at the high points. You want to buy low and sell high, as who's that? Who I pronounce that? Brilly Ant says. You want to buy low and sell high. It's all simple math. But importantly, with the Gladstone stock, this is a REIT. This is a real investment trust. They own a bunch of stuff in the industry. I'm gonna break down this stock later, but you want to buy low and sell high. Now you're thinking about buying stocks. You're trying to put together an investment strategy. You're trying to find what stocks to buy, what to do, this, that, and the third. What I tell people, the easiest way, the most non-confusing way when you're buying stocks is buy stocks that you're already a consumer of. So if you're already a consumer of that product, you're going to want to think about investing in that product. For instance, everybody has a cell phone, everybody has an online banking. So what you're going to want to do is open up your online banking and look at all the different companies that you invest in. But before you even do that, since you have a banking account, whether it be Chase, Wells Fargo, Citibank, Bank of America, I would say start following the stock of the bank that you're already banking at. The reason I say that, if you have money in Wells Fargo and it's giving you 0.01% interest, if we go to a bank, let's see if I can find the bank that I bank at, Wells Fargo. Open it up real quick. Go back to my browser window right here, and we're going to look at the year over end price. So if you look at Wells Fargo, you can see over the year the stock price is down 20%. But if you're able to buy at the bottom and buy more at the dips, you'll bring your costs down. So if we look at the 3-month trend, the money that you would have sitting in your Wells Fargo account is growing at a 0.001% interest, but the stock price has grown 44%. Now, would it make sense to have money in a banking account sitting and doing nothing, or would it be wise to move that money into the bank that you're currently banking at so you could get some of the profits that bank has? I think it would be wise to get some of the profit that banking has. So another thing you're going to want to do, and I'm going to show you guys, once you start following certain stocks, you're going to use certain websites to follow those stocks. And this is, I believe, a website. One of my favorite websites to follow is this one right here, Seeking Alpha. I love Seeking Alpha because it allows you to put your portfolio into your own account or your own profile, and you will get notifications sent to you about the stocks you're either on or that you're looking at. So kind of like when a YouTuber goes live, you get a notification. When your company does something, declares a dividend, cuts a dividend, merges with the company, sells, or whatever, CEO gets caught up in some scandal, you will get a notification on your phone and you'll be able to go read it. But more importantly, when you read articles, so this is one stock that I own, Planet 13. When you read these articles, other people who are invested in that company will also comment about what's going on in that company, so they take some of the hard work away from you. We got Dwayne, he says, "What's up, GMT?" They say, "Get the likes up, GMT put together a good presentation and only 3 likes. We got 34 people watching." But when these people do articles and people who are actually invested, people could tell you about the company because they're invested in the company. For instance, we all know who Kevin Samuels is. So when I do a Kevin Samuels video, the last one I did, it got close to 11,000 views. It had 500 different comments, and all these people, they know everything about Kevin Samuels. They know about his stepdaughter, they know about his mom, they know how many kids he had, they know about where Kevin Samuels worked. He worked at Papados, Home Depot, Walmart. They know Kevin Samuels fought and beat cancer. They know that he bashes BWs on this platform under the guise of dating and relationship advice. But all these people in the comment section know things about Kevin Samuels. They know Kevin Samuels better than Kevin Samuels. But when you go to websites like Seeking Alpha, Yahoo Finance, and people are commenting, the reason why they're commenting, because just like y'all know about Kevin Samuels, they know about these stocks because they're either invested in them, thinking about investing in them, or just basically interested in the idea. So when you read these articles, and it gets kind of hard to decipher what is being said in the article about a merger that's being made, somebody in the comment section could give good insight into the situation, because one, they're there because they're invested in the goddamn stock. So Seeking Alpha, one of my favorite things you gotta do, you gotta look up Seeking Alpha. So now we're not at the point of buying a stock yet. We're just putting together we are just putting together a watch list. So I'm going to share with you guys watch lists that I have made. So when I go to my list right here on this side right here, so let me go ahead and collapse them all real quick so I could get to them real fast. So over the years, hold on. No, you weren't supposed to do that. You weren't supposed to do that. Let's hit you again. Okay, which list do I want to start with? Okay, there we go. So I have the list right here. So when I showed you the different type of stocks, let's see if I could bring that up on my OBS. The different sectors of stocks. Let's see right here. So there's these different sectors of stocks, but I have it broken down. So we're going to focus in on the information and technology because that's one of the biggest. That's a big sector right there. Hold on, we got a couple of super chats. I am Aries Queen B says good job GNT, more and more. And Brilly says I'm going to try Seeking Alpha. I'm not happy with Bloomberg Finance. So he does Bloomberg Finance. I used to do Yahoo Finance, but that Seeking Alpha, the information that they give on there about the stocks, I thought it was second to none to nobody else. But when you're putting together your watch list, you're going to think about the certain sectors you want to be invested in. And there's a lot of stocks. There's like over 1,000 stocks. There's a number of different stock exchanges. So you got the NASDAQ, you got the New York Stock Exchange, the NASDAQ, S&P 500, you got the OTC. There's a number of different stock exchanges. You got stocks exchanges in Europe, you got stock exchanges in the Asian countries. So there's a lot of stocks that you could literally buy from your phone or from your computer. But the way I tell people to break it down is find these stocks. So we're going to start with energy and oil and gas. We're going to start with oil and gas. I'm pretty sure everybody has a car. Everybody gets in the car, and when their gas tank is empty, you guys go to the same gas station, you fill up, you put your $40. I'm in California, so we got to put in $40 to fill up our tank of gas. If you're in the South, it's very good in the South because you put in $20 to $25 and you can fill up your gas tank. But everybody buys gas for their car. Why aren't you investing in the company that you buy gas from 4 to 3 times out of the week, depending on how much cars that you have and how long of a commute that you have? I mean, you go to this gas station, you buy their gas, and then you go inside, you buy candy, you buy sodas, you get your Snapples, your donuts, you do all this business with this oil company, but you're not investing in it, and you're missing out on it. So what are the different type of gas companies? Well, let's start with a big one. Let's start with a big one right here. We are going to look at Chevron. Now, Chevron in California is probably the most expensive gas, but it has a reputation of delivering better gas. Well, why not invest in gas? So that's Chevron on the Seeking Alpha. This is a dividend stock. This was a stock I was considering buying. And since I'm a dividend king, we're going to talk about dividends a lot here, especially on this channel, because I love dividends right here. You look at the list, you can literally see when they pay their dividend and how much the dividend is. So there's a couple of things you're going to look at. Let me check my OBS to make sure you guys can see. So right now you have the declaration date. The declaration date for a dividend stock is basically the declaring if they're going to do a dividend for either that month or that quarter. So you can see right here, On January 27, 2021, they declared a dividend. This, the only thing this means is this since they declared February 16th is going to be the ex-dividend date. February 17th is going to be the record date. The pay date for that dividend is going to be March 10th. It's going to happen quarterly, and the amount of that dividend is going to be per stock is $1.29. So if you have 10 shares of Chevron, the payday date, that means your brokerage will actually get that money. You will get $1.29 per stock that you have. The ex-dividend date, you're going to buy the stock on the day before the ex-dividend date. So really February 15th, if you own that stock, if you buy that stock on that day and you own it through the ex-dividend date and the record date, you are in line to get that dividend date on the payout date. So the record date, that's when it records the dividend, and on your brokerage it'll show you that after the record date that you will get paid this amount of money for this amount of stock on the payout date. So it's very important if you're investing in dividends to know when the declaration date is and the ex-dividend date. So whenever I buy a dividend stock, I come here, and all the stocks that I own that were paying dividends, I literally put the ex-dividend date on my phone, so we could see here it pays quarterly. So about February 16th, February 14th, February 14th, you go back February 15th. So about the February 14th, there's a February 12th. So I would set my phone February 11th. This is going to be the ex-dividend date. And the reason I do that, because I might want to buy a number of shares within a period of time to get that dividend. So let's say I like the dividend yield of this company. I want to get involved. I want to get some of that dividend. I know around mid-February, I'm gonna want to buy that stock. So I'm gonna look at the stock price. I'm gonna see how it's doing, and I'm gonna decide if I want to invest in that company for the dividend or not, or if I want to invest in company because I like the financials, I like the direction of that company. So you could really time when the stock is going to pay a dividend because it's all here. Now, sometimes what may happen, if I go to this stock right here that I invested in a while back, AMLP, this is also a dividend company that I've invested before in the past. A couple of problems that you're going to have with these dividend dates. We saw that Chevron, it declared a couple of weeks before the ex-dividend date. But sometimes these companies will declare the day before the ex-dividend date. This is why you're going to want to use Seeking Alpha, because the day it declares a dividend is going to let you know through a text notification through your phone. And that's how you know if they're going to cut the dividend, if they up the dividend. So this company right here, this company, it didn't do too great as a company. It did a reverse stock split, so the price was actually really $4 or $5 per share, and then it jumped up to around 30, but you had a less number of shares. So it may appear that this company is doing good, because we look at the dividend payout, it went from 19 cents, 15 cents, then it jumped up to 75, 71, 68. So it all looks good because you're thinking you're getting a high dividend. But really what happened, when this stock was paying a 15-cent dividend, 19-cent dividend, it was around $5 to $8. But now since it's at $30, the dividend is higher, but the stock price is higher. So it was a company that if I would have stayed in, I would have made some money of it. But there was other stocks that I wanted to get involved with. And this one, it really wasn't doing what I thought it would do. I got some advice on this stock. I held it for a year and a year and a half, and it did okay. It did okay. I wasn't overly impressed, but that's just something you want to talk about dividends right there. So now we are starting to build up our watch list. So what you're going to do right here, whatever brokerage you're going to do, you want to create a watch list, and you're going to want to put, see if I could find it. See if I could find my oil companies real quick. See if I could find my oil. That's one thing I don't like about this good old Robinhood account on this computer is I really can't find the stocks I want to get into real quick. So let me go ahead and just log in from my phone, and I could see it real quick. Or do I just want to start from the top? Yeah, so let's just go ahead and go back to the tech industry real quick, since it's at the top. I don't have to fight my computer. Okay, so when I was breaking down different sectors to watch, because each sector is too big to constantly watch, and they have different subsectors. So I go back to my investing. We're going to focus in on information and technology. So right now, information technology, the tech industry, it's a real big industry out there. Your computers, your Googles, your different streaming services, anything that has to do with technology. And there's a lot of stuff to choose from. So if we're going back to our philosophy, which is we're going to invest in companies that we are customers of. If we're going to invest in those companies, if we're looking, we're all on YouTube, so we're all on a device. You're either on an Android device, you may be using an Apple product, you may be using an Intel laptop, you may be having a HP Pavilion laptop, a Microsoft laptop. They have all different technologies and different chips in them. They all work. So you want to use companies that you're invested in, because one, it's going to be easier for you to keep up with that company. And when you spend money with that company, you're going to get paid on the back end, either through dividend or through capital appreciation, because you're invested in that company. Then when you start following a company and you see that that company isn't doing too good, you may want to switch to a different company within that industry and do better. So right now I don't like Apple products. I will never buy an Apple, a Mac, an iPhone, because whenever somebody puts a Mac product or Apple product in my hand, I cannot work the thing. But if somebody puts an Android product in my hand, I could work that product to a T. But let's say one day somebody put an Apple iPhone in my hand, and I was able to work that Apple iPhone because they sat me down, they told me all the features and why I should use an iPhone or whatever Mac product. I could say, you know what? I kind of like Apple. Let me go out and buy an iPhone. Let me go out and buy a Mac. Let me go out and buy all the different $100 cables that Apple loves to sell its consumers on a consistent basis. I mean, I've heard that Apple will literally change the charging cord and make you go out and buy a new cord just to charge your goddamn phone. Well, that's going to lead to more revenue. So I may want to invest in Apple. I'm going to follow Apple, see who's on the board, see who's the CEO, look up their information, look up their financial reports. Somebody says I'm an Android kind of guy. That's yes. I'm all Android. Or let's say when you get on your smartphone device, you're on Facebook. Well, guess what? If you're going to spend all this time on Facebook, sharing people's videos on Facebook, in these different BW hate groups on Facebook, these black men bashing groups on Facebook, why not invest in Facebook? If you're going to spend all this time on Facebook, at least get paid for it. So then you start to follow Facebook. So let's see how we could follow a stock here. Let's see, which stock are people interested in buying in the chat room? I'm gonna make this interactive. Let's see, Rollo, he sent a $3.81 super chat. He says, "Grats GMT on building strong." That's right. We're gonna build stuff up. But somebody give me a stock that they want to follow, and maybe we'll break down this stock just a little bit. And while you guys are giving me different ideas on stocks, if we go back to our list, let's say we go to consumer staples, so food and beverage. If you're buying Heinz, if you go into McDonald's every day, if you go into Chipotle every day, why not invest in some Chipotle? Somebody said Disney, somebody said Tesla, somebody said Ford. Okay, we're gonna do Ford stock. And the reason why we're gonna do Ford stock, because I was once invested in Ford for a while, and if I were to buy a car company, it would be Ford. But we're gonna look at Ford stock real quick. So if the ticker symbol for Ford is F, so a ticker symbol is basically an abbreviation of a company. So when you get in the stock industry and people say ticker symbol F or ticker symbol AM, is basically an abbreviation for a company. Most companies try to use the same letters that's in their name, and some companies don't. They use a whole different ticker symbol that has nothing to do with the company name. But we're going to look at Ford because I once had some shares in Ford. Let's see if I could find, if it'll show me the history of when I bought Ford right here. Okay, it sure does. So let's look at the history of my time buying Ford. Okay. Oh, you guys can't even see it. There we go. Now you guys can see it. This was my history over the past 2.5 years to buy Ford. Now, why did I buy Ford? I bought Ford for the dividend. And I bought Ford because I was looking at buying a Mustang, and if you have a certain number of shares in the Ford company, you would get some kind of discount when you go buy some of the cars. And Ford has a couple of cars on my dream list that I wanted to buy for my channel. So we're going to look at Ford right here. This was a dividend paying stock. We're going to look at the history as I bring up the dividend history of the stock so I could go back and forward from. Okay, we can see that right there. So we look at Ford, and we're going to look at the history of when I bought Ford. I bought Ford when it was in the $8-9 range, $10 range, $8 range. 8 more 8s right here. 7, I bought it in the 6. So I guess this was about to crash right here. It dropped in the 5s. I bought some Ford. I bought some in the 6s, and then I sold all of it at about $6.50 on September 25th, 2020. The reason why I bought Ford is I wanted the dividend, so I wasn't really able to enjoy the dividend. I got paid dividends. Let's see, when did I get paid a dividend? September 25th, 2019, I got hit off with a dividend. And then March 5th, I got hit off with a dividend. I was looking to buy this company for the dividend, but when COVID hit, as we look at the dividend history, it declared January 8th. Went ex-divvy January 29th, paid that out March 2nd, and then after that they didn't pay a dividend due to COVID. The stock price went down. Now the stock price, it has recovered to about the $11 range. So when we go back to our big chart right here, let's hit the back button. We go back to the big chart right here. we can see that over the year it's been doing good. But if you go to the 5-year chart, so around 2019 is when I start buying it. So all through here I was buying it. Then the stock market crashed. It got as low as what, $4. I bought it at 5, but I was buying other companies because I just thought other companies were better. But the stock, it has recovered. It has recovered for whatever reason. They're not paying the dividend. So when the company has the dividend, they may cut the dividend. Some cases this year because of COVID, and they didn't have the profit, because a dividend is just the profits it's paying to its shareholders. So if you're like a Carnival cruise and you're paying a massive dividend because you got all these customers going out on cruises, and then all of a sudden due to COVID the government says you can't sell your ships because of COVID, well, guess what? They're not going to have any profits to pay their shareholders to, and the stock price is going to go down because a lot of people are invested in the companies for the passive income. So you could literally, let's say, put $1,000 in a stock, and if that stock pays 10% for every $1,000 that you have invested, it's going to pay you $100 over that year, plus or minus whatever capital appreciation. So you're going to want to buy companies like Ford when it's at the bottom. Now you don't know what the bottom is going to be, and Ford is not really a good company to gauge the bottom, because I want to say over the years Ford was like a $20-$30 company, and then it just dropped in the teens. It dropped single digits. It even dropped before the $4. So it's kind of hard to gauge where the bottom at is going to be for Ford. So you have to consistently, there's that word again, consistently over time put money into a stock to hopefully catch the bottom, because you can't, it's hard to time companies when it's going to be at the bottom. This is a good chance to buy. You will only know what was a good chance to buy by looking at past history, which I have up here, which is the 5-year graph, and it's very obvious to see that the perfect time to buy Ford was when it was at $4.33 right here. I mean, when we have revisionist history, we could actually look at the graphs. It's very easy to say when Ford was $4.33, this was the perfect time to buy Ford. But when this happened, the government just shut down. People weren't looking to buy cars. They weren't able to work. They didn't have money to buy the brand new Ford Mustang. So there was a lot of uncertainty in the market. V-Dub Buggy says he got in at $4. Yes. I mean, when the whole COVID thing happened, it was an interesting time, because all these stocks were plummeting in prices. Some of these companies were actually still in business and doing rather good business because their business structure wasn't really affected by COVID, but their stock price went down. So during that time, if you would have bought a stock, you would have actually got in at a good time. But when you're breaking down the stock, the next thing you got to look at the financials of the company. That's right. You got to look at the financials of the company. And there's three different financial things you're going to look at, financial statements that you could look at when you're looking at a company. You're going to look at income statement, you're going to look at the balance sheet, and you're going to look at the cash flow. That's right. See, in this space in YouTube, everybody has a problem with pocket watching. Everybody says it's not masculine to pocket watch another Negro. And I'm sitting there watching these people talk about pocket watching, how it's bad and how it's not good. And I'm sitting there, all these rich people in this country around the world, all these investors around the world, they literally pocket watch other companies and their competition to see which company is a good company to invest in and which is not a good company to invest in. So when we get back to this pocket watching right here, when you look at the income statement, it'll tell you the revenues that this company has made. So right now it says 115,949. Now we gotta understand it's not $115,000. It's basically slotted because they don't want to put the millions, billions, and or trillions of dollars that they have in revenue. So they move the decimal over so it's easier to read. And so this one was at 140. So in December 2016, they have a revenue of a 141, and we could see that from each December, the revenue went up for 3 consecutive years, and then 19 and 20, the revenue for that company went down. So you got revenues. It will show you the gross profit. It will show you the operating income. It gives you the expense of the company. It will give you the net income. It will basically give you everything about the company. And each number is a different metric in which people use to buy a different stock. So some of the metrics that are used, and which I won't touch on all the way in this video. I'm gonna touch on it in future videos because I can't give you the game now. We only gonna be live for maybe up until 11 o'clock, if that. But you have different metrics like EPS, PE ratio, forward PE ratio, and all these numbers on these income statements are being used to gauge the financial health of the company. And if a company has bad financial health, like Ford had when it went down those couple of years in 18, 19, and 20, well, the stock price fell from $20, the $30 range, all the way to the $11, $10, even into the single digits, up until now during the recent spike. So it will tell you about the assets, the current assets. It will tell you about the debt, the liabilities that these companies have. So when you start investing in some of these companies, it's very important to look at the financial statements of these companies. Then you also get the cash flow. So if you're investing in a stock that pays a dividend, you're going to want to look at the cash flow because you want to make sure that the company is making enough money not only to sustain the dividend but to increase the dividend. So there's certain companies that are dividend aristocrats, dividend kings. They have increased their dividend over a long period of time, and by long period of time I'm talking 25, 50 years of consistently raising the dividend on a consistent basis over the years. So when you invest in a company like Ford, you're going to look at the financials. Another thing you're going to look at, and was probably my favorite thing to look at, and it may be some of the most boringest thing when it comes to stocks, is that each stock does a presentation call about their quarterly earnings, yearly earnings, things that happened in the past that were good, things that happened in the past that were bad, how they're going to pay off debt going forward, or different business ventures that they're going to get into going forward. And you could sit through these conference calls and listen about the companies that you're invested in, and it will give you some inside information. Now, when you listen to these investment calls, you have to listen to them more than one time so you could digest what is being said in these conference calls, because the CEOs and the board members, they're always going to try to paint a picture that their company is doing good even when it's not doing good. So that they may be in a ton of debt, and they may spend cutting the dividend so they could use that money to pay off that debt, to get out of that debt, to eventually grow the company going forward. But if you bought into a company for the dividend and for the good stock price, and they cut the dividend, well, you lose the dividend and the stock price is going to go down because the value of the company is going to go down. The perception of that company is going to go down because the dividend isn't there anymore, and people are going to sell that stock, which brings the price of that company down. Psycho Candy says, to me, the stock market has hit a little bit of the ceiling. I don't know about that, because whatever the ceiling is, whatever you think the ceiling is for a company, more than likely they shoot through that ceiling. So companies like Tesla, when Tesla hit over $1,000 a share, people thought that was the ceiling. And then Tesla did a stock split, and the stock price went back down to $100, but there were less shares of that company, so the shares really didn't lose value. It was just a stock split. And then Tesla, from when it did the stock split, went from 100, 200, all the way back up to $800. So whatever you thought Tesla's ceiling was, they crashed and they ran through that ceiling. So let me check through. Then Psycho Candy says, some people don't even consider the financials or PE ratio. You're right about it. There's a lot of people who, first of all, you got to understand what makes a stock price goes up and what makes a stock price go down. The financials of a company could be terrible, but if there's a good perception about that company and what that company is doing, that stock will go up. For instance, there was an electric company vehicle called Nikola. This company has yet to sell one vehicle, but on this particular day, the stock price soared up because the perception of that company was positive. Even though that company hasn't sold a vehicle, hasn't made any profits, doesn't even have a dealership open up to where you could go look and buy. They basically have all these different concept cars and what cars are going to release 5 years down the road and what big things they're going to be doing 3 years down the road, but they haven't sold the car. But people are investing in those companies because the perception is that company is good. They think that company is going to be the next hot thing, and that's one reason why the stock price will go up. Let me see. I'm gonna go ahead and drop the link and see what people want to come on. But if we go back to that list and you're still lost about which companies to invest in. Future videos, I'm gonna break down each sector right here. But we're going to focus in on, what sector do we want to focus in on? We're going to focus in on the banking system. The banking system. Yes, that's right. The banking system. So there were a couple of banks I invested in the past. Let's see. Will it let me work? Will it let me work it? There we go. So you want to start, like I said earlier, way back earlier, open your phone, see the bank that you're invested in, Wells Fargo, Bank of America, put this onto your watch list. Let's see, how did we do that on Robinhood? Or so... Right, there's an option right here that says add to list. This is already in the list, but it'll tell you to add it to the list. So when you start looking, when you put your banking watch list together, if you slide down, it'll tell you other banks, Bank of America, JP Morgan. It will tell you what other people have bought or what other people own, and you will see usually stocks within that same sector. Let's see, let me say my stream is buffering for some reason. Am I still there in the chat? Am I still there in the chat? Hold on, we got Sick Lid. He comes through with a $20 super chat. He says, damn, GMT, you gotta change your name to Get Money Thomas. That's funny. Thank you for the $20 super chat. I appreciate that. But you're gonna want to organize your watch list into the different sectors so it's more easier for you to find. So you want to put all your financials in one sector, all your oil in one sector. Then when you go through all the companies that you shop at, you may want to do a separate list for that, and you just slowly go through each stock. You see what you can afford, what you can buy, and you then attempt to buy stocks. So I was invested in Wells Fargo because I had a bunch of money in my Wells Fargo bank account just sitting there waiting for me to spend. So I thought I would invest my money into Wells Fargo. They end up cutting their dividend. And then when I was going through the different banks and starting to rank these banks against each other, I saw that Wells Fargo wasn't the most superior bank. JP Chase and Morgan was far more the superior bank. I like Citigroup, so I actually thought about closing my Wells Fargo account and going over with JP Morgan and putting my money in there and investing in their stock, but I just found other stocks that were better for me, and I decided to ride it out with Wells Fargo. I mean, from the time that I sold Wells Fargo, the stock price actually went up. Let's see, I sold 30 shares at $23 back on September. And now that stock is at 37. So if I didn't sell, I would actually be in the green. So actually, for the most part, whenever I bought a stock and sold it, I either sold at a profit, and then after I sold it, the stock price went up. So another thing you got to do when you start buying stocks, you got to hold them for a long time. But once you start getting some success when it comes to risking your money, hold on, we also got to talk about risk. That's one thing I didn't talk about, which was risk. Let's see, do I have that right there, or do I have to create a slide? Yes, I have to. I'm going to go ahead and create my risk slide real quick. Shouldn't take me that long. Bam, there it goes right there. So when we talking about risk, so whenever you buy a stock, you have to go through whatever risks are out there. There's a lot of risk out there. You got the market risk. So basically, that's basically risk within the market. So when you start investing, you don't know if the government is going to lock down the whole economy because of a disease called COVID-19. That'll put things out of risk. If you have a liquidity risk, so let's say you buy a house, well, it's hard, or you buy a really expensive car, a show car, that car is not liquid because you got to find a seller to buy it. Then you have the concentration risk, which it's different things. Most people say diversify, which is good. It's always good to be diversified. But when you're diversified, if you have 5% of your portfolio double up, well, that 5% of your portfolio now becomes 10% of your portfolio, but it's a small reward. But if you have your eggs in one basket, and that one investment, which is 100%, now doubles up. Now that 100% is now 200%. But at the same time, if that egg that you have in that one basket goes to crap, let's say you were heavy on Carnival cruise, and due to COVID, you not only lost your dividend, but the stock price dropped 80, 60, 70%. Well, your portfolio is going to be hurting. But there's different risks, and you got to manage your risk management the same way these companies manage their risk management. Real gamer says he's thinking about putting money back into Boeing. Yes, I have a whole watch list just following airline stocks. So Boeing, Alaskan Airlines, United Airlines, Hawaiian Airlines. I actually followed that for a while. I thought about getting in, but I just didn't do it. Like there's so many stocks to buy. Sicklet says Warren Buffett took all his money out of Wells Fargo, so I actually did something that Warren Buffett did. I sold all my Wells Fargo account. We got the Real Deal Financial. He's in the building. He talks about stocks on his channel. Let me see if I can open up my StreamYard and see if anybody's joined. Because right now I have no idea if somebody hit the link or not. I have no idea if somebody, but my man Real Deal Financial, he has a. Oh, so we do have a couple of people on StreamYard. Let's go. I'm gonna go ahead and open it up for people who want to come up. We got a couple of people in on who want to join the conversation.
Yo, GMT, do you have semiconductor stocks, man? Cause literally, my semiconductor stock portfolio has literally jumped.
Semiconductor. No, I don't have any
I
semiconductor.
have MMX. Well, I have MMEX, and that's pretty much solar power with clean energy. That literally jumped. I'm gonna hold on to that until it's $1.
Okay, hold on. I'm pulling up on my Robinhood right now. So we got Miravax Medals. It engages in the evaluation and acquisition of mining royalties and precious metal streams. Its assets include some place in San Jose. I guess all these people through all these places throughout the country and or the world. The company was founded by Jeffrey A. Burns and Daniel A. Flattery on January 9, 2016, and is headquartered in Vancouver, Canada. The listed name of MMX is Marvelmex Metals.
No, no. MMEX.
Oh, MMEX.
And when it comes to like mining, I use AUY. That's actually Canadian, and it also has a lot of approvals for construction by the Canadian government. Now that's actually a better one.
Okay,
This is solar power.
I pulled it up on Seeking Alpha. So you got to tell me about this stock right here. It's telling me
This is
that it's less than a penny.
Yes, it's a microchip. It's literally the not a microchip, micro cap stock, and I invest in that because I think it's gonna go beyond a penny. I think it's gonna go 30 cents due to the fact that it shifts to solar panel. It has literally a solar power plan for clean energy. So when it comes to this, it's a development stage. So I'm gonna buy and hold on to this one. Now, other ones that I use and I have made money on is Brazilian banking company. When it comes to Brasor, let me get it correctly because it's in Portuguese. So I do global investments as well. And AUY, that one you can type up right now.
Hold on, people can't see it. Okay, there we go. I have to make it bigger. So you said AUI.
Yes. Now that has approval by the Canadian government.
What's the name of it? Does this
Yamana Gold Inc. And it's increased the life of mine gold production.
what stock exchange is this on?
Well,
Because it's not pulling
it's
up on
OTC.
Seeking Alpha.
It's the OTC.
Okay.
I trade OTCs, pink sheets, literally the high risk situations. I do high risk, high reward when it comes to solar panel and microchips because those are going to be the biggest industries. Plus, you got Biden Harris are already having in the stimulus where they're going to put more money into those corporations.
You said it's on the
OTC,
OTC. And how much?
AUI, and it provides a dividend as well. That, and I managed to get another one when it comes to mining. But this one I managed to be up when it was around 202. So I literally hold on to this in around 2019, and this started going up around 30-40% in my portfolio. So I'm just gonna keep on holding when it comes to this.
Oh,
Now, my exit plan, I'm trying to hold on to this until it hits either 7. But if it literally gets its big push where you're pretty much seeing 40-50 billion dollars being put into the solar industry, that I think solar industry can go up, and also mining can go up when it comes to AUY, when it comes to its government approval. Plus, they have lending available. So I go by off of, are they getting grants? Are they government approved? People would say PE, performing in earnings and ratio, which I do um, when it comes to my analysis, but I literally choose performing markets because anything semiconductor, when Tesla's up, the whole semiconductor industry is up. And that's something by pattern that I noticed.
okay.
And also, a lithium battery stocks as well is going to be needed because Elon needs more batteries.
Mhm. Do me a favor. I want you to put the link to where people can find the stock because I'm having a hard time bringing it up. So if you could put that in the chat,
Oh, okay.
we could also look at it
Okay, my bad.
because it's not on Robinhood because it's not on
No,
the
no,
it's
no,
not, it's
none of
not
these are on
yeah.
Robinhood.
So tell me about these stocks because they tell me that penny stocks are more of a higher risk. There's a risk that
Yeah,
these companies can possibly not perform the way that they will perform. Then there's the possibility that these companies could also explode and give out big profits to the people who are investing in them.
yeah, when it comes to at least my strategy and what I tell to my clients is if you have $50, 40 to $50, and if you have at least 300 to spread around, I would say pretty much spread it around when it comes to emerging markets. Because these markets got the biggest boom, like microchips, anything involving microchips. Elon needs those microchips. Elon needs lithium batteries. So a lot of these companies is going to be, what I'm gonna put in the chat, is going to be a lot of high risk, yes, but it has a potential due to the fact that it's in a booming market. Plus, there's also a global semiconductor shortage, y'all. For all my tech people, they know what that means. Prices is gonna go up, and they need mass production. So anything that's manufacturers, when it comes to semiconductors, microchips, I'm gonna bank on. So I'm gonna put these in the chat. So let me do one thing. Let me do this. Okay. Okay, I put it in the chat. Yeah, palladium is also higher than gold.
Okay, somebody said uranium, silver, gold, and copper. And so which brokerage did you buy these stocks on that you used to buy these stocks on? Because
Thinkorswim, Fidelity, TD Ameritrade.
okay, so I'm gonna look for it on Fidelity because I have a Fidelity brokerage account.
Okay.
We got DOD in the building. So tell us, uh, other than penny stocks, do you invest in any more conservative or any more traditional stocks that people would know about?
Repeat that again?
Do you invest in any stocks that are more conservative, let's say large cap, mid cap stocks that
Oh
people
yeah,
would be more
semiconductor
familiar with?
ETF. Semiconductor ETFs. So let me pull that up. I'm trying to do four things at once. I'm literally posting in all the links so people can see what I'm seeing. Okay. But semiconductor ETFs is pretty stable due to the fact that Tesla is really the main reason why it's stable. Uh, Gush is up. Gush is really undervalued too. Gush is up 10%. that's something that's in my portfolio.
Let me ask you this question, Real Deal Financial, because I was on Up in the Unicorn stream a while back, and we were talking
Hmm.
investing and stuff like that, and she was talking about how working at places like Amazon, where the labor is hard and the pay is low, and people are out there struggling, people are trying to really improve their financial situations. One thing that I found out when I start investing and I would get burnt out or tired at the job and I had a stock that was hitting or a
Hmm.
stock that I thought would hit, I found out that you had more energy to take an extra shift or to push through whatever adversity was hitting you because now the money that you have coming in, instead of using that money to just pay your bills, because once you have enough money to pay all your bills, you may lack the motivation to go above and beyond. But when you want to put money into different stocks, that gives you more motivation because now you're working and that work now has a goal in mind that you want to achieve. So it becomes much easier to take the extra shift to save the extra money because you know that extra money could possibly double up, triple up, or if you get lucky and hit a real big home run, that money could 10x on a particular day.
Oh yeah. Oh yeah, easily, easily. Because when it comes to something stable, AMD, that's literally micro devices. So it's semiconductor, but it's a larger company. It's 105 billion market cap. It has a PE of 42, PE of 42.
But
The EPS
what's the ticker symbol of it?
AMD.
Oh, AMD. Okay, I think I actually bought AMD
Because
way back
Cause
in
I'm
my
gonna hold
early
on. I'm gonna hold on
days.
to that. I'm gonna hold on to that motherfucker until it's 250, 350.
Yeah,
It needs to be competing when it comes to that, cause that's semi. That's tech. That's semiconductor. That's literally everything that's chip tech, and also AMD has a chip demand from Intel. Intel wants the action. I'm gonna put that link in the chat for y'all as well.
yeah. I had bought AMD way back. I bought two shares. Check this out. I bought two
Hmm.
shares at around $31 and I sold them at a loss for 23. The reason why I sold them at a loss because when I first started investing, this was way back in 2018, I didn't have an investing strategy. So when I saw that I was losing money, I bailed out. But if I would have hung on, it appears that I would have almost tripled my money that I originally invested into this stock. So another thing you gotta do is you gotta have a solid investing strategy. So when you do go through the storm, you know exactly why you bought the stock and what you expect the stock to do going forward. You want to talk about that?
Yeah, cause when it comes to following trends, I would say right now you follow the way of the market because right now the bull run is pretty much going to be going, and plus third stimulus is going to pump up the market because really stimulus checks ain't meant for really getting people out of poverty. It's to pump up the market one more time. So a lot of these companies are just going to go up due to the fact that there's going to be a lot of pumping in the market. Certain components are just going to be up, like in Apple, like Tacman says right here, show one of the most truest comments I've ever seen. AMD and Apple are numbered customers for Taiwan semiconductors. That's another good demand as well. So anything semiconductor globally, due to the fact it's a shortage, I go by off of is there a shortage in this or not? Is there any type of limited or not? Or is there any type of restriction? So when the restriction is relieved, like cruise lines, I'm deep in it. Airlines, deep in it. Oil and gas, extremely deep in it. Gush is actually up 10% as well.
Mm-hmm. Yeah,
So
yeah
when it
when
comes to investing, mm,
yeah
and when it comes,
when the whole COVID thing happened, I bought Carnival Cruise and I bought a bunch of gas companies because they paid a dividend, and when the stock price went
right
down,
now, since the Texas situation is bad,
mm,
NRG Energy is gonna literally skyrocket. Actually, I got into the dip because it was at 40, and I'm gonna hold on to that until it's probably 95 later on this year. So I'm gonna do a fixed dollar cost averaging. So I'm gonna keep putting 40, 40, 40, 40 month to month.
Okay.
That's what you usually do. If you don't have a lot of money, just do the fixed dollar cost averaging. If you only
Mm-hmm.
have 50, if you can only piece up 120, 150, just do it a month on emerging markets. Ride the wave.
Okay. Okay. So back to what I was saying earlier, you want to buy on a consistent basis. So I try to buy stocks every Monday and every Friday. I do $5 a day, depending on the
Good move.
brokerage. Each brokerage gets $5 a day,
Good move.
and my Robinhood gets 10% of my income. So Monday will come, since I would ref on the weekend and make a couple of $100 on the weekend plus whatever I would get paid on the weekend. I would take that with the 35, put that in the Robinhood. I would see what stocks went down, and I would try to dollar cost average on those stocks. Then Friday would hit, Friday's payday. I would take 10% and put that
Mhm.
in there. Now what I want to do is I want to take 10%, put it into my stocks, and I want to take another 10% and put it on crypto, but I'm not a big expert on crypto. So I haven't
Well, when it
I
comes to
haven't I haven't really
crypto,
touched crypto as of late.
you ain't touched the crypto stocks at least, because they also run up when Bitcoin is up, they up too.
Yeah,
Same way semiconductors is up. What when Tesla's up, semiconductors is up.
yeah. I bought crypto during the big explosion in 2018, and I got eaten alive.
Okay, so you got PTSD, I see.
Hmm.
Okay. You got PTS on Yo. But when it comes to weed stocks, high tide, Techman talk about high tide, you better go long on high tide and MJNA. And once again, this is not financial advice, as I am not a financial advisor. I am just somebody that has money into these stocks. Me and Grandmaster Troll is not responsible for this, as we are both not financial advisors. Anything that you do is on you, and this is definitely just for entertainment purposes.
Yes, entertainment purposes only. We got Sick Lid coming through with a $5 super chat. He says, "Not luck, GMT. Millions of people rich buying S&P 500 every year and waiting 30 years." So that's another thing. People will actually buy these ETFs or index funds, and you'll see them. They start out around $20, then over a 10-year period, that $10 ETF is now at 300 and something dollars. So not only have they 20x their money, but if you're putting money in constantly over a 20-year period, you're going to grow your money at an exponential rate. That's why it's important to not just put $1,000 in one day and then sit for 6 months. Then after the 6 months, you lost money or only grew 5%. No, you got to consistently put in money over the whole year.
Yep. And now, when it comes to compound reinvestments, like there's certain dividends, like I'm gonna tell you one of these dividends that are on a dip that actually provides a stable dividend. Hold on. Let me do this real quick brief. Okay, real quick brief. Okay. Banco, Bradesca, and I think it's BBD. Hold on, let me give you the link, because it's not gonna show up. It's literally a OTC.
You said DBD?
Yeah, B. It's Banco Brad Desco. So yeah, it's BBD. This provides a dividend, and also I've been holding on to that due to the fact that a lot of banking stocks are still at an all-time dip due to the fact of COVID, and also a lot of bank restrictions was well lending restrictions to consumers. But it will, I think it will be able to go up due to the fact that additional stimulus is going to be done. A lot of it's going to be more. How can I put it? There's going to be more set aside for banks to be able to lend back again. Interest rates is still low at this time period. So when it comes to BBD, it provides a dividend plus it's at a dip. At its highest, it was literally around 12. $12. So when it comes to that, I'm just gonna hold on to that due to the fact that it has a dividend, and reinvesting dividends is actually a good way how to utilize compound reinvestments. Now, really, the main reason why it's at a dip still is because J.P. Morgan exit its private banking business in Brazil. So that's literally why it's at a dip. But you have other banks from other countries like Deutsche, Banking News. They're gonna be able to get involved with BBD. So um, I'm gonna put the link in the chat, but I'll get on mute because I'm about to I'm about to overrun this.
Yeah, you be investing on all them weird stocks on these, on the OTC and everything.
GMT. Don't judge. Don't judge, man. I do got stable ETFs. Like the ETFs, it's the stable ones. The high risk that I want to be able to just go balls deep in. That's pretty much going to be a lot of semiconductor, weed stocks, 3D printers as well, because we gonna need 3D printer construction to be able to print up the equipment, and you got construction companies going all in, and a lot of the most of the stocks that gets involved in 3D printing is up too. You got share companies that was at $25 now at 250.
So in ETF that I did invest in, it's called Global X Funds, Global X Computing. So this is basically an ETF that focuses on like the Zooms, Spotify, Shopify, Dropbox, all of those cloud-based companies. So the reason why I bought this stock, because I was looking at ETFs of other sectors and I saw the performance they had. So their graph will look something like this, but instead of starting at 15 and being at 28, it was started at 15 and was at 300. So I was looking for the next big one. So I bought Global X and I bought this one, and I had some great success when I invested into this company right here. So the ticker symbol for this one is CLOU. If you're interested, I think tomorrow I'm actually going to break down individual stocks in a more concise way instead of freestyling it like I did today. But it was a good talk. You got anything else for us? A real deal?
CCV has a huge merger going on.
You said CCV.
CCIV, my bad.
CC.
CCIV has a huge merger.
So we got Churchill Capital.
You got Deutsche Bank putting money in this as well.
Okay, so
And I,
this one just recently IPO'd. It looks like, or
yes,
recently
sir.
became available.
Yes, sir. They got Deutsche Bank putting in millions into that, and plus you got certain scenarios where other banking corporations just gonna follow. You got BlackRock, multi-trillion-dollar company, multi-trillion-dollar corporation. My bad, putting in a couple million in this as well. So I'm really following the money. I'm literally finding the SEC filings. That's how I find why things are gonna blow up. I try to find is the SEC filing in the 13F quarter reports over really PE and performing earnings. That's really my method. So that's where we differ.
Okay, okay.
So,
So you got any other sectors or advice to give right now?
um, well, you about to end this off?
No, I still got a good 15 minutes in me if I wanted to.
Okay, hold on. Let me. Man, why y'all? Why so you don't do no micro caps, no pennies, not even stocks under $10?
I do stocks under $10. It depends on the stock. So I don't focus on super small caps like you do because it's just of the risk associated with them. But if
Well, that's why I spread the risk around.
yeah, but
Like I literally have 70 companies when it comes to this stuff due to the fact I can spread around the money. But I get what you mean. And it's real nuts to be able to invest in something that's literally under a penny just to see it go up 5 cents.
yes. So what I'm gonna do,
Man, but what ETF you do? That's my last question to you.
What was your question?
What is your what? Well, let me get it right. What industries that you look for as ETFs? Do you use inverse ETFs, where if the market is bleeding, you can pretty much win on this downfall?
No. So when I look at ETFs
Mm,
or any stocks that are similar index mutual funds or whatever they are,
okay.
I try to find companies that I want to invest in. So I wanted to invest in Zoom, but the price was like $400. I wanted to invest in Dropbox. Dropbox isn't that expensive, but I wanted to have exposure to that whole sector. So I would look for ETFs that have holdings in those specific companies. So I found Cloud, and Cloud, there was some other company that was invested in a similar sector, but I liked the companies in Cloud and the price of it as opposed to the other other thing I was looking at. And then when I first got into investing, I had downloaded the Stash app, and that had a bunch of ETFs. So it had one, if I could remember, or two. It had one that was for people who were millennials. So it had stocks like Google, Amazon, and basically all these different blue chip companies. And it had another one which was at a higher price. I bought into both of them, and it did well, but I wanted to be more individual stock, because when you buy an individual stock and that individual stock pops, you'll get more of a benefit if you're holding that individual stock that pops as opposed to the ETF. So I was playing around with different stuff when I first started, and then when I came up with my invested strategy, I wanted to be mainly dividends. And then I would take dividends and go put it into a growth stock or a value stock or into a different ETF. And then when I saw that ETF pop, whenever it was time for me to put money back into my brokerage, I would put some money back into my dividend stocks and then put money back into the ETF stocks.
Okay. Makes sense. Hey, actually, that's very matter of fact, that is very conservative. So I guess how would you say? I guess I'm free falling. I'm just jumping out the window without no safety,
Yes,
without
you
no parachute.
Yes, you are jumping out the window, and then hold on, see if I could. And then of course we all watch YouTube, so I started watching other YouTubers that I like watching. I'm gonna try to see if I could pull them up right now, because there's other people who talk about stocks way better than I can, because they have the experience, they have the $1 million portfolio, and they actually get on YouTube and they will actually show you what's exactly in their portfolio. And when you look at their body of work, you can see when they told you to buy a stock, why they told you to buy a stock. And then over the period of time, you can see the success or the failure in the advice that that person is given. So one person I follow, I'm gonna see if I could bring up his channel right here, because he actually has a good channel in the way he breaks down stocks. My man Jeremy right here from Financial Education, he has what I think is the best stock channel on YouTube. So if you go watch his videos, he'll break down the stock, he'll break down the financials, he'll break down the CEO, the board, what he expects the stock to do, why he bought the stock, why he's selling the stock, and it gives you confidence. So after a while, he told me about the marijuana stock, Planet 13. He broke down the board. He said all these people who are on the board, they were in government who gave a bunch of legislation on marijuana laws and the legalization of marijuana. So if any company is going to be successful in marijuana, it's going to be people who are on the board who were a part of the government. So I bought that stock, and whenever I had extra money, I would put $100 here, $50 here, and that stock ran and ran and ran, and it's still running. So that stock was like a dollar and something about 6 months ago, or about when the crash happened. It was at a dollar, and that stock is now at $7. So the stock, it's 7x, it's 5x in price, but he expects that stock to go up to $20 and $30. So if you want to 3x your money over a 2 year period, and he has a track record of different stocks that he's told that he's uh, that he has told as to why he's buying the stock. And if you see somebody put 15 grand on his video into a stock, and then 2 months later that stock is at doubled or tripled, and now he's at 45 grand. Or if you put 30 grand into Tesla, and Tesla 10x's, you just literally saw the man make $300,000 over a month's time.
Yeah, man. That's easy. So when Tesla's up, like I mentioned, semiconductors is up as well, man. Semiconductors is up as well. So anything microchip, also the generators. I forgot to tell you that generators as well. Um, Solar panels, solar power, green energy, clean energy, renewable energy, where you can turn waste into into other things. So you got to be able to figure out what's the sub niches when it comes to these markets. At least that's how I invest in it, to be able to figure out companies that haven't yet popped.
And then another YouTuber I watch, I have him up here. His name is Wall Street Trapper. I just happened to see him on Jay
He's the
Morrison.
best.
Huh?
He's the best at it.
Yeah,
He's literally the best
yeah,
at it.
he's also pretty good. But since we're black and we're come from a different culture, he's able to communicate stock language in an easier way that's easy for us to dissect, because we're able to relate what he's talking about, and we could vibe with the energy that he's giving off in his video. So the first time I saw his video, I said I like that young dude. I'm gonna go ahead and subscribe. Whenever he does a video, I go watch.
We got somebody else on the panel.
Let's see, who do we have? We
Hey,
got
what's
we got
what's going on?
DJ Child Support. Tell us what's on your mind.
Yes, what's going on? No, I'm not look. I'm not going. I'm not looking for Pookie and Ray Ray today. They off the hook today. No, man. Yeah, there's another ETF that I've been looking into. Well, which I got it like a while ago. It's the LIT. It's on Robinhood because I got Robinhood and Weibo, and as the real deal financial was saying about the reusable energy, the Sun Pacific Holding, that's another one we should look it into. I mean,
DJ,
what's
yo.
up?
If I dude, magical fist bump, just imaginary fist bump.
Oh, okay, okay.
Oh God, I was looking on that for like weeks.
Oh, okay, okay. Yeah, no, I was the one that on the comment section talking about CCIB and all the other stock on the comment section. I know the name is different on here, but yeah,
Okay.
I'm the dude.
I'm looking at the Lit ETF right now. It's up 117%. So that basically
Mm,
means if you invested in this stock a year ago, whatever you had invested, it has doubled up to this point in time.
yeah, yeah. I bought it around 70, and I'm holding on to it. Also, MJO and YOLO, that's another good ETF as far as marijuana stock.
Yes, that's ETF
You
situation.
guys think so? Because I invested in that MJ stock, and I guess I bought at the high
Wrong
point,
time,
and I
wrong
got
time.
and, and I got eaten alive by that stock.
Trust me, you're the only one. You see, a couple of days like a fucking black buff, man. I took a fucking L. Oh, there's another one though. The OGI. That was like it went down to all the way to $1.60. Then went up to six and went down to right now it's under $4. But I got it. I got it when it dipped at $1.50. So I mean I'm still in a good position. And yeah, another one is a SNDL. Yeah, that one's down, but it's the best time to buy it. And as far as reusable energy, I would say there's a one that would be a great price to buy is Renasola. Renasola was like 25, right now it's $16. It's a reusable energy. I'm just looking through my.
Yeah, I'm looking at MJ stock right now. I had bought around 37. And when that dropped at around 30.29, that's when I had got out. So I I didn't stay in that stock too long.
Oh, bro, let me tell you, I remember I bought a shit plug power at 5 and I sold it 30. Oh, I regret it, bro. And a fuel cell. I sold a fuel cell at 5, man. Those were biggest regret that man, I took a major L for that one.
Hold on, we got my man C over. He says F Robin Hood. It's such a shit
Yes,
company now. I
yes,
I
that's
will
what I
I,
use for
I
that.
I will say this, C over. When they was telling dudes not to buy GameStop when it was at $350, that was actually good advice that Robinhood get out. Because if you bought GameStop at $350, you lost a bunch of money.
Yeah,
So
that's why I
Yeah,
told people not to buy at
yes,
when they
so
good. Right.
Robinhood is trying to help people out because right now GameStop is at $45. So you would almost lost $300 per
damn,
how much stock you bought. So
cause
Robinhood was trying to
dude
protect the
was
new
buying at
investor.
89.
But
Dudes was
but
buying at $89 still. I'm like, what are you doing?
and other app was there also similar situations. So I can all blame it on Robinhood though. I mean that's what I heard, but I haven't physically seen.
Well, well, to be honest, it's control. It was a controlled mechanism that they did. That was a serious control mechanism that they did. But to be honest, I see both ways. Like Grandmaster Troll is right. If you would have bought at 300, that's why I told all my consults stay sheer away of AMC. Do the AMC, AMC, GameStop. No, 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 no. If you had $300, I would have told you to find a stable ETF if you're just starting out, if that's your risk tolerance, because it's gonna be at $12 here soon. Because you still got people buying at $45 a share. You're gonna have people still buying at this mark, saying that we need to pump it up again. But people already lost when they pumped it up the first time, so they ain't got the money to re-pump it up.
Let me ask you this real deal financial. Is GameStop a $45 stock?
No, by valuation, I would say it would be like around $9 to $12 teetering off of that
Hmm.
price range.
And even when this stock was in that 15.25 range, it was paying a dividend before they had cut it.
Yes, they did. They cut that
So
dividend quick.
so people are gonna try and tell me GameStop is a $350 stock, even though they cut their dividend and enough time hasn't surpassed for them to change the financial outlook of that company going into the future.
See,
Cause
luckily I bought fractional shares. So I didn't take them. I just test the water when it was like 270 and it went up to three something, and I dumped it. So I was in a fortunate situation. So I got really lucky. And as far as now that we talk about reusable energy, let's talk about banking stock too. The ticker is a
well,
CARB. This is a
okay.
bank.
Wells Fargo's at an ultimate dip right now.
Oh yeah, the
Wells
CARB is
Fargo's
good.
really, yes, that too.
Yeah, I heard it's the black owned business banking in New York. That's what I heard, but it's been steady growing.
So you said Carver Federal Savings Bank.
That is correct.
Okay, it's a bank
Any
holding which
dividend?
engages in the provisions of consumer and commercial banking service through Carver Federal Savings Bank. It offers deposit products including demand. So it's basically a bank. Tell me about why should people put this on their radar?
I haven't really touched it, but I've had it on my watch list for the past month, and I think I would say for like I would say more of a like hold it for this year and see how it goes. Like, but I can't say it's a long term because it's hard to say because I don't know it has the same impact as Wells Fargo and Bank of America or Chase.
Do you know it's banking interest? Do it provide a good interest? Do it have any type of mechanism to be able to reel in more people? Like if this Carver Federal had any ability to provide hypothetically 1.8 or a 2.2, you're actually competing with Ali Bank when it comes to interest on interest on savings accounts. So if you can be able to find that, or if anybody in the chat, okay, Siova said he had to stop doing business with Carver. What did Carver do, Siova? You got Siova. You need to hit the link, man, because I got some cross-examined questions when it comes to Carver, because there's a lot of people putting Carver under my radar
Hold
as
on.
well.
I got
Yeah, it's been a month.
I gotta recopy the link for Siova, but go ahead. I'm about to put the link back in the chat.
Oh, yeah, I got a question for Real Deal Financial.
Yes, sir.
Yeah. What's your honest thoughts on Zomedica? But I bought those around 15 cents.
What industry it is? Matter of fact, give me the ticketer real quick.
Yeah. It's a ZOM.
ZOM. ZOM.
Yeah, it's called
Okay, and you
Zomedica.
bought it at 40?
No, I bought it at 16 cents.
16 cents?
Yeah.
Dude, if you had $16, then that means you made $220.
No, yeah, I bought it over 5,000 shares now.
What shit. If you for real, man, you know that and Visalink, those are two good other stocks that Visalinks and also Xenonics. So those three you would definitely put in the radar, man. What I would say is, did you take profit out?
No,
Okay.
not yet. I'm holding on for see how it goes.
Oh, dude, you need to take profit because it's pulling downward, man.
Okay.
Take profits out. If you cashed out at 16 cents and you pretty much went as deep as you possibly could,
Uh-huh.
get out of it and see when it dips. Like buy into it. I would suggest if it takes a harder dip, like say if the RSI, because it's definitely overbought. The
Right.
shit is definitely overbought. So you need to get into it when it's $1.75, or if it dips at $1.50, then
Mhm.
re-enter in. But if you think it's gonna go beyond and everything, hey, it's your money, man. You know, if you got into it that early, I would say take profit or just use house money.
Gotcha. Yeah.
You know, that would be certain type of scenarios you would definitely utilize. But salute to you, man. You managed to get into that very early. Uh, if it goes to
Yeah.
$4 or
And
$5 and
I got
everything, gee,
man. I'm waiting for my also my skills. It was AKA Flying Eagle. I'm waiting for that to blow up. I bought it when the company was like I think 2 months after they established. It was it's an online gaming company, and I think they just recently signed up with NFL. I I bought it at $11 flat. I bought it 70 shares. Right now it's $34. It was $42 and it dipped down.
DJ, put those ticketers in the back chat, man.
Oh yeah. I'm gonna put on a private. Yeah, I'm gonna put it right now.
Put that, put those in the back chat. My email's in the back chat as well.
Okay.
Definitely got a link when it comes to certain scenarios when it comes to this, man, because there's so many positions that you can utilize. But Ovo, you did business with Carver, man. What happened with Carver?
Yeah, I did business with Carver. Can you hear me?
Yeah, we can hear you.
Yeah, I did business with Carver, and it was like I stopped dealing with them. I think I still have an account with them. Honestly, I have to call them to make sure if they didn't close it or not. I just took all my money out of there. I just didn't. I didn't like dealing with the bank. It wasn't anything actual like functionally wrong with the bank. I just didn't feel like being bothered with doing business with them. But I don't think I closed my account permanently with them. So I can always give them a call to see if my account's still open.
But what's the interest rates like?
I have to look at my paperwork. I have to
Okay.
find that. Yeah, because I had all that stuff, and because I did have a savings account.
Because if
And
anybody that's listening, if you're gonna invest in banking stocks, look at the interest rate that they provide to their customers. If it's very high, then I would say it'd be a safe move. If it's like starting out and it's giving a high interest rate, not interest rate, a damn, I was about to say dividend, but if it's giving out good type of yields for you, if it can be able to do 1.8 to 2.2 or 2.5 like Ali Bank does, then I would say definitely do some research and gently put your feet in the water. But CO, how long you did business with them, man? Was it a year?
I was about, I feel I would say safe 2 years.
Okay.
It was 2 years. Yeah, yeah. It was 2 years. I had money in the savings account. I had an emergency for the money in the savings account, so I used the money in the savings account from that account. I had another savings account, and I just never really like loaded that account back up again. So wasn't anything like functional or company wide that made me like, nah, I'm not fucking with them anymore. Which is why I never like badmouth Carver or anything like that to anybody. I just stopped. I just stopped doing business with them.
Okay.
So it's nothing like the companies run like shit or anything like that.
Okay, because if it was like something similar how Wells Fargo did it when there was opening accounts without you knowing it, then that
Yeah,
would
none of
hurt
that. Yeah, yeah,
every-
no. Yeah, yeah. None of the Wells Fargo nonsense. I
Okay.
just situationally at the time I just stopped doing business with them and I just kept my main savings account.
I would definitely try to research how many if there are any data on it, how many people are banking with them. And it's a New York thing? Is it a fully East Coast thing?
I think it's a New York East Coast thing
Okay.
because
Because here
when
in
I
the
was
West
speaking
Coast,
to
I
the
haven't heard no Carvers in the West.
yeah, I think it's I think it's like more of like a regional bank because that's the reason why I started doing business with Carver because I was on the whole I want to support black businesses type thing. So I said let me go ahead and put my money in the black bank. And that's actually what I told the account manager. I said, hey, I just want to put my money in here. There's a black owned bank in Harlem, so I just want to put my money in here. That's really the only reason why I did business with them. It is I know it's more of a northeast type of situation. That's from what I remember talking to the bank manager about. So yeah, I don't know of any carvers. I've never seen a carver in Virginia or anything like that.
Okay. Now, high dividend stocks, well, the stable dividend stock I would say would be Pepsi. Pepsi, Coca-Cola.
That's kind of been on the conservative side. Pe- pe-
Stable.
pe-
Stable. You say I'm too aggressive, GMT. Come on.
People want the big dividend. People want the big dividend.
Oh, okay.
Hold
Okay.
on.
Let me y'all gonna make me pull something out the bag when it comes to high dividend.
Okay.
Okay.
Hold on.
Y'all
I'm
y'all
I'm about to share my most successful dividend stock that I ever bought. Hold on, let me just pull up the information real quick on it, so I could show you guys what happened when I bought it. See, you guys can see it. All right. So the best dividend stock I bought was AM Ontario Midstreams. They lay pipes somewhere in the Pennsylvania, Ohio area, I believe. Anyway, let me go back to the history. Let me go back to
You looking up where to lay pipe in Ohio like your boy?
yeah. You gotta lay them pipes.
that is funny. That is funny.
So I bought it. I'm looking at the history. I bought last year at around 4, and then the COVID thing had happened, and then that's when I bought real heavy. I bought 40 shares, 25. When I bought 25 when it fell to $1.91, which was close to the bottom, and 211, and then 302, and then see if I could filter it just the dividend. So this would actually pay. So if you think about buying a stock that you bought at $2 and it pays you a 30-cent dividend every quarter. So if we do the dividend yield on that, the stock is at 2. So you take 2 and you divide it by 30 cents. Or is it the other way around? Hold on. Yeah, so you take 30 cents and you divide that by 2. Each quarter I was yielding 15%. So if you do that for a whole year, 15 times 4, that's 60%. So for every $100 that you would buy of that stock, you're getting a dividend of $60. So you're making 60% just on the dividend plus whatever capital appreciation that you get. And the price went up from that $1.99 point, that $4 I was buying it at. And right now it's at $8. So you think about it, not only did you double your money by just buying the stock from capital appreciation, but you're getting anywhere from 20 to 60% dividend yield. And I did that because of the crash. And the reason I was able to do that, because I had watched the video of my guy right here. I'm gonna put him up on the screen. Joseph Hogue of the Bowtie Nation. He had suggested a bunch of gas stocks. He didn't suggest Ontario Midstream, but it happened to be on the chart of some stocks that he suggested. And when I researched the company, I had saw that even though the stock price of this stock was going down, they were increasing the dividend. So the dividend, it started out at, let's say, 2 cents, then 7, 10, 12, 14, then 16 cents, then it jumped up to 30 cents. But the stock price over that time, if I could bring it up real quick, hit the back button, hit it again. The stock price over that time, if we look at it just over the 5 years, it IPO'd in 2017 at around $22, and then over the years that stock price is going down, but the dividend is going up. So I was looking at it because once a company stock price goes down, usually the dividend goes down to keep in line with a consistent dividend yield, so the company isn't paying out all the profits via the dividend. But I saw that they were raising the dividend. So when it got to $1.99 or the low point right here, and I had bought more, it was a risk because I knew that when the dividend date would come, there's a possibility that the company would end the dividend. But then I listened to the conference calls, I read articles on Seeking Alpha, I was in the comment section, and people were telling me the reason why this company isn't going to cut the dividend because there's another parent company or sister company called AR, Ontario Resources. They are leveraging that dividend to fund that company. So they're going to keep this dividend for a while. So it's a good time to get into it because they're going to pay you this exorbitant dividend because they're going to pay this dividend to the other company. So then when they did a press conference call, it sounded like they were unsure if they were going to keep the dividend. So I had got out of that company, and then lo and behold, they ended up cutting the dividend because Ontario Resources were using the dividend to leverage, and once they had enough money to do whatever they do, they didn't no longer needed that dividend. So it was a good time to get out of it. So that's how I was able to make money off that stock right there. You guys still there?
Yeah, we still here.
Okay.
It's just I'm not
Yo.
used to the talk about stock talk on this on the Grandmaster Troll panel though.
Yo, search my dividend, yo.
You said what?
It's in health. It's in health. National Health Investors Inc. That's literally a dollar dividend that I managed to produce by holding that, and also Prudential Financial Inc. That provides a dollar dividend as well.
What's the ticker symbol of it?
NHI.
Okay, National Health Investors.
Oh, National Health Investors.
I got that into the extreme dip.
Oh,
when
nice.
I got into it, it was 50. It was around 50.
Yeah, I didn't remember. I bought a Genesis Health when it was 38 cents, and I look back, I didn't realize it was $1 today because I dumped it like when they hit exact 78. That was my exit plan.
Because it took a dip. Because NHI literally took a dip right when I got into it. And I thought I made a bad investment, but then I realized that it provides dividends as well. So when it comes to this situation, Winrose Health Investors is going to invest into the caregiver industry. A lot of companies are putting in a lot of money when it comes to this market, so that's why I'm kind of confident on it. It provides a $1.10 dividend. It's at $70 a share, and I'm gonna keep on doing a fixed dollar cost average. I'll probably put in 100 into this month.
Yeah. Oh, hey, real deal. I do got another question though.
Yes, sir.
Yeah, I have 3 shares of Zoom stock. Is it what's the best time to sell it? Right, in your
It
honest
may
opinion.
keep on running. It may honestly keep on running because teleconferences and Zoom is pretty much needed. You got military that use this as well. You got people that got to go to court, got to go to Zoom court. So when it comes to that, to be honest, man, I really couldn't tell you to be able to exit. 'Cause I don't want you to exit and wound up like people that say sell Tesla months ago. Then Tesla literally blew up. I don't want to tell you no
Oh yeah.
counterproductive advice. So when it comes to the entering, I can pretty much tell you that a lot of these stocks is at a dip. So well, in general, a lot of these stocks is in a dip. So when it comes to Zoom, I would say hold and try to figure out anything that's a competitor of Zoom. I would try to see what's the competitors because a lot of niches and sub niches is. I'm waiting for OnlyFans when OnlyFans become a public company. Goddamn.
I'm waiting for the family court stock to show up. Everybody will make money with that.
Okay, hold on. I want to talk about this stock that was brought up, National Health Services. So right now, this is a dividend that pays a 6% year. So basically, if you put $100 over the year's time, you will get around $6.30.
Yes.
If you invested in it. So I'm gonna look at the dividend history right now because everybody loves dividends. So this one right here, you can see that throughout the years. Okay. So from about 2013, the dividend has started out at 22, then it jumped up to 69, and it's pretty consistent. They steadily increased the dividend a couple of cents consistently just about each year. We see it go from 73, then one year it was 77, and the next year it was 85, then the next year it was 90 cents, then the next year it was 95, next year it was $1, and then 2019 they raised it to $1.05. Then in 2020 the dividend, it appears to have went down a little bit, but it looks like, hold on, it looks like it stayed the same because you read the declaration date and it cuts in half. So you do 87, or basically 88 plus 20. That's what, $1.08. So they have pretty much kept the dividend intact. So it looks like a good company because they're consistently increasing the dividend.
Yeah, so I can provide a stable stocks now. I ain't just all high risk and penny and micro caps now. That I'm pretty much going to do fixed dollar cost averaging. Keep on pretty much piling on to what I got due to the fact that it's stable. You got more investment involved into it. Plus, it's still an industry that's stable. That's why it has a stable ass dividend payout. So, it ain't like a dividend company that's going to give you 29% yield, but it's extremely high risky where it's going to be 29 this year and probably be none next year due to the fact that they cashed out everybody too high.
I like risk.
Mm.
I take risk. I take a lot of risk.
Well, my risk is like microchips, man. Like you put $20 into something, you get 50,000 shares in a microchip. and you got that for like 30,
Well,
40
I
companies
got
in
something.
the
I got something
American
to take
market.
care of. I got something to take care of, guys. So I got to hop off real quick. But it's good. I'll watch in the clouds, and I may be able to come back in if I can.
RSC over.
All right, later.
Respect.
All right, so I am Verbal was looking for a good dividend stock to invest in. I'm getting ready to buy more of
gave
this
him-
stock right now. It was
I gave
one
him.
it was one of my more successful and more stable REITs that I bought. It's called Gladstone Commercial. It's an industrial REIT. I'll read the description for you guys. Gladstone Commercial Corporation Real Estate Investment Trust also includes Gladstone. So there's a different other sister companies within the Gladstone. It's a real estate investment trust which engages in the acquisition, investment, ownership of net lease, industrial, commercial, and real properties. Its portfolio consists of single tenant commercial and industrial and real properties. This company was founded by David and John Gladstone on February 14, 2003 and is headquartered in McLean, Virginia. So I'm going to show just the recent history. First of all, I'm going to go ahead and show the stock price of it over the last years. So over the last 5 years, it started out at 15. It peaks at around 23. Due to COVID, it dropped down to 7, but now it's back in the 18 range. So you could expect this stock to pretty much be anywhere, I want to say $17. It'll max out at around $21 basically. And this REITs, it pays the dividend monthly. So if you look at the history, it's pretty consistent on a monthly basis. It doesn't change the dividend. It will pay the same $12.50 on a monthly basis. Right here, make sure I'm looking at the right one. Yes. So it pays the same 12-cent dividend every year, nonstop. It's basically like clockwork. It'll declare mid month. It'll go ex dividend and it'll pay out at the end of each month. So the reason why I bought this is because I guess when they rent to different spaces, there was a big scare when COVID happened that people and companies wouldn't be able to pay their rent and keep their lease up. But through the Seeing Alpha, it told me every month when rent was due that this company was able to collect 98 to 99% of their lease contracts. So it was a pretty consistent company to bank on the dividend for. Now I'm going to bring up the history of it. So it pretty much just shows when I bought and the dividends that it consistently had paid me for when I owned it. So basically it got to a point I had 54 shares and it will pay me 12 cents a share every month. So I would get close to $6 every month just by having just short of $1,000 in it. So I'm gonna go ahead. I'm gonna buy some more shares of this company. But can the people on the panel tell me what's the favorite dividend stock that you currently own?
The previous one, and also SAFT, SAFT, Safety Insurance Group, that provides a 90-cent dividend.
Okay, I'm pulling up SAF.
SAFT. And this is kind of expensive too. People, verbal in the chat saying it's expensive, but really, to be honest, if you want to get a really good dividend, it got to be an expensive type of stock.
Well, now it doesn't have to, because now you're able to buy fractional shares of company. So even if you would buy 25% of that stock or 50% of that stock, you will get the same percentage in the return of a dividend.
Can't argue with that. I definitely can't argue with that, man. You ain't gonna hear no argument.
So we're looking at safe right now. They basically hold on. So what they do, they pay. They started. So they basically increased their dividend by 10 cents every few years. So they may go 3 years paying a dividend, or 2.5 years pay a dividend, or a year and a half, and they'll increase it by 10 cents every 2 years. It looks like.
Yeah, growth. That shows growth.
So you're getting that, and then when we pull up the stock chart over the last 5 years, we can see that this company consistently grows over the years. Now it crashed because of the COVID, but we can see that the stock looks like it's going to rebound.
Yeah. Yes, sir. We talking about actual gains when it comes to my dividend yields.
Hold on, before I close out, I'm going to see if I could pull up my dividend tracker that I made a while back and see if I could get it to pop up in OBS real quick.
Yeah. Oh, yeah.
Okay.
Let me see.
Let's see, I'm gonna have to add a new window. Hold on. Before I do that, let's see if I can just add it right here.
A real deal.
Yes, sir.
Yeah, you rock with the X1 stocks, the 3D printing.
Yes, that's what I literally told GMT before you came up. Y'all need to
Okay,
get
okay.
the components. Find
Yeah,
a
yeah.
component. Like, it's cool to find some company that sells it, but go for the components. Same thing with Boeing. Like, Boeing is extremely expensive, so go to the companies that sell to Boeing that are public, or the components that they need, plane parts companies. They got contracts from government and also Boeing. Plus, Boeing got government contracts, so they win off of Boeing. So if Boeing is up, those specific companies, they can be able to win alongside
Okay,
with
okay.
Boeing.
Okay.
You got to find the components. So yeah, 3D printers, 3D printing, all that.
All right.
Yeah, yeah.
Okay.
Can you guys see the
Yeah.
screen share I put up?
Can you zoom it?
Can I
you
zoom it?
Okay.
Yeah, so definitely X1 in a nano dimension definitely gonna do some number towards the end of the year.
Can I zoom it? How do you zoom a screen share?
You're the troll master. You're supposed to know how to zoom it.
Yeah, you're supposed to know, dog.
Man, I never thought we talked about stock on this channel though. I swear.
How about now? Can you guys see that? Or is it you guys still can't read it?
Man, let me full screen my screen. Then
Okay.
I-
Okay. So when I had my whole stock dividend portfolio, I had mine set up to where when I would get paid when each month came, I had stocks paying me dividends on a monthly basis, and I had stocks paying me dividends on a quarterly basis. So I did this to basically organize the stocks that I had so I could better keep an eye on all my stocks and how they were performing. So a couple of monthly dividend stocks were like Apple, CLDT, which are hotel REITs, good, which we just went over. Prospect Capital was a mortgage REIT. AG&Z was a mortgage REIT. ECC was also a mortgage financial REIT. But they all paid monthly dividends, and I would track the ex-dividend date and when they paid out. And then I needed stocks that would pay me on the 3rd of each month, the 6th, the 9th, and the 12th of each month. So I found individual stocks that I liked that paid dividends out on those specific months. So I could count on getting a dividends, because if you just randomly buy stocks, you may only get a dividend on the 3rd, 6th, 9th, and 12th month. But what about the other 8 months that you don't have dividend income coming in? So I had at CenturyLink, which changed their name, I had Ford, and I had NAT. Then I had Wells Fargo for a moment. I had Brookfield Property. So in Carnival Cruise, I never got a dividend because of COVID. And then all my oil and gas, they would pay me dividends on the 2nd month, the 5th month, the 8th month, and the 11th month. Then I had a number of stocks that would pay me dividends on the first month, the 4th, 7th, and 10th. And then I would come down here and I would actually calculate how much dividend income I was getting so I could see the growth. But I did all of this because when you're investing, it takes a long time to get money. So you can see right now when I first started doing this, back in July of 2018, I got 57 cents, then I got a dollar 17, then 388, 308. Then it, as the months kept going up, it eventually got higher and higher. So when I restarted and I actually knew what I was doing, in 2020, that first month I got 343, then I got 25, then I got 13, then I got 36, and I got 103. And then the last month I did this on, or one of the big months, I got $170 worth of dividend stocks. But I just basically say all of that just to say, once you start investing your money, it's going to make you track the money that you are investing. And it's going to put you on top of your finances and you'll improve your financial situation. So what are some of the other apps? Because Atom Finance, you could start your account and then link all of your brokerages account into one account, and you can see all your money on one application, as opposed to jumping from Robinhood and jumping to Fidelity, because you may have stocks that are in the OTC and the stock exchange. You may have an Acorns account, and you want to see all your money in one area so you can better track it. So tell me some of the apps that aren't brokerages that you guys are involved in or may use.
Well, pretty much Thinkorswim, Fidelity, TD Ameritrade. That's the only three that I'm pretty much in when it comes to brokerages and stuff like that. So you putting me on game with this. You definitely putting me on game with this. Now, what's the name of this app again? I'm writing this down.
Atom Finance. Let me see if I can pull up their website real quick.
Atom Finance.
Okay, like Atom Bomb.
Atom Finance. Okay, I'm definitely gonna put this on my. Okay.
Okay.
Atom Finance.
Okay.
And it's an app or it's a site?
It's a website. They have an app as well.
Okay, definitely. I appreciate it. I definitely,
Okay,
because I
cool.
was use a stock twit in a bar chart. That's what I usually use. Yeah. Market watch, bar chart, and stock twit. That's what I usually go to. Or if not, I usually go to YouTube. I usually follow Chris Sane. Yeah, he's another good YouTuber that I watch.
Okay.
So we got I Am Verbal. She says she uses Robinhood and Webull. I do have a brokerage on Webull, but Webull for me it's so difficult to use. I haven't really used Webull, but I heard from Webull if you want to trade options, you could instead of actually making an option, you could pretend to make an option and play around and see the outcome of that option that you make. So I do like that feature for Webull, but it's just such a difficult app to use if you're not used to it. So
Hate
Yeah,
options.
I got both too.
I'd rather use a MetaTrader. I'd rather use a algorithm trading bot, a MetaTrader, MT4 and MT5 with an expert advisor on it than to do options. But options is good if you think if it's gonna keep going up. Like you do that with some of the expensive stocks, like Tesla options is expensive as hell, but
Yeah,
Tesla's gonna keep on going up.
man. If only bad thing about Webull is there's a certain penny stock is not available. Like I think there's more options for Fidelity and the Charles Schwab. Like sadly they don't have a high tide, Pacific Sun Holding, OZAP Energy, OZSC. They don't have. It's not available on Webull. So I might have to end up opening up a third one. I don't want to, but because I want to jump into the OZAP and high tide. Those are the main reasons why I might want to open up another one though. And the singular point, it's 5 cents right now. It was penny like 2 to 3 weeks ago. That's another reusable energy stock. And the ticker is SING. Sing.
hold on, before I close out, because I do got to get ready to go work. Somebody in the chat room says they haven't invested in any stocks yet. That was my girl Neon Eyes. So what I'm gonna do for you, Neon Eyes, I'm gonna drop my Robinhood link. You're gonna sign up for the brokerage, and just by signing up, you will get a free stock, and I will get a free stock, and the stock is basically money. So you are literally getting money just to sign up for a brokerage. So just give me a couple of seconds to drop it in, because I gotta sign in from a different device and I gotta go through all these two-step verifications. So if you don't have any stocks, hit one in the chat. Hit one in the chat, and we're gonna go ahead and we're gonna get you your first free stock. That's right. You came onto the Grandmaster Troll's channel and you're able to make a little bit of money.
The Grandmaster Troll giving you a free dividend.
For some reason that computer's going a little bit slow, so I'm gonna go ahead and use this link right here. Copy the link copied. Go to YouTube. Go to subscriptions. Click on my own stream. And we're going to drop it in right here once it loads up. Okay. So I'm dropping the link in right now. But guys, you guys have any final thoughts for us?
Oh, I ain't got much to say, but I appreciate for letting me join the panel. Appreciate Grandmaster Troll, and I definitely learned so much from both you guys. So shout out to you guys. So
DJ, hit me up, man.
Oh yeah, I just emailed you though.
For sure, man. I got some lists ready for you, dog. I got some lists ready for you too, Neon. Neon, this is unacceptable. You literally show up to class and you ain't even gonna get involved.
Yeah, so we need Neon Eyes to hit that link, sign up, and when we come back either tomorrow, because the market closes at 1 o'clock, so in another hour the market will be closed. But Neon Eyes, tomorrow or Wednesday, we're gonna need you to come on the channel and you're gonna show us the free stock that Robinhood gave you. We are gonna hold you accountable to getting some free money.
Yeah, at least. Jeez. But all right, man. I'm out of here. GMT, DJ, respect to you. Subscribe to my channel, man. Book a consultation. bhmdf25@gmail.com, man. God bless. I'm out of here.
Yeah, all right. Thank you, Grandmaster Troll.
No
Appreciate
problem,
it, man.
no problem. Peace.
Yes, sir.
Yep, so my camera froze. Okay, so yeah, we're getting ready to close this one out. I see a couple of people. She says, I'm investing my time to learn more. That's great. You always got to invest your time to learn more. So tomorrow, Neon Eyes, if you're available, I am verbal tomorrow. If you guys are available, if anybody who's new to investing, come on to the show, hit the link, and we'll just walk you through a couple of basic things, getting you started, signing up for a brokerage account. What do you need? How to buy a stock, how to sell a stock, how to navigate through the different interfaces of all these platforms. But other than that, yes, we're going live every day, 5 days a week. It'll be easier for me to do it because at least Google will pay me some AdSense, and I want to send a special shout out to the people who supported. I believe somebody sent me a Cash App as well, so I'm gonna give some acknowledgement to that person as well. We got Real Deal. He's doing consultations, so support him and do some consultations as well. Let's see, we had MZ Denova 24 came through with a Cash App supporting the channel. Thanks to all the people who sent super chats. I really appreciate it, but y'all know who it is. It's your boy, the Grandmaster Troll. I might go live tonight and give you some good trolling content. Yes, I'm still gonna give y'all the trolling content because I know y'all love the trolling content. I'm gonna give you that as well, but I gotta go to work. It's your boy GMT. Peace.